Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. If you need any help with anything, check out finding-value.com. That's where we've got a community, a Discord. We talk about individual companies, potential sectors that look good, etc., etc. We've got a question and answer session coming up this weekend at 7 a.m. Mountain Standard Time. So let's dive in here. Let's see what's going on today. I give you my financial opinions, and yeah, let's dive in. So we've got the dollar here, the DXY. For the most part, we've been moving sideways for the DXY. Today, we got a little bit larger selling pressure day, down 0.4%. Is that a beginning of a move lower where yields start to move lower? We saw yields pull back today. Generally, the dollar follows where yields go, and the dollar is more or less a measurement of relative strength against other currencies, and it's really just relative monetary strength. If a certain country has a tighter monetary policy, generally their currency is stronger because it's tighter. Tighter being they're increasing interest rates at a faster pace than another currencies. So we're weakening or we're loosening our interest rates, and if interest rates are loosened roughly all at the same time, this index would be relatively flat. But today we did get a little bit larger downward pressure day, meaning that maybe we're loosening a little bit more than others. Looking at the 2-year yield, we are flat on the 2-year. Now, I consider this kind of flat in the short term here, in this box. We're basically going back and forth in this box here. So the 2-year is relatively stable. We've sold off more so on the longer end during, I'd say, 2024. So if you look at 2024 this way, we strengthened and then we really lost some strength there. We sold off the past 1, 2, 3, 4 or 5 days we sold off. Is this a continuation pattern where we're going to go down further, or is this going to find some sort of bottom here and start to work its way back up? Because we do have a little wick on the bottom. Now, the short end, I would say, is relatively stable. When we look at the short end here, we've gone 4.4% and we're at 4.2%. The long end of the curve, we went from 3.8 to 4.1, back down to 3.8 in a relatively short period of time. And are we going to come back to that 3.4-ish level down there? Yet to be determined. Why does this matter? What's the big deal here? Yields is what prices assets. In a declining interest rate environment, certain assets are preferred versus an increasing interest rate environment. Increasing interest rate environment, oil does very well. It's an inflationary environment. Yields chase inflation, and oil and some of these other inflation-sensitive assets generally outperform. When yields start to go down, like we've seen here, oil can still go up under that condition, but generally gold starts to awaken. Precious metals start to do pretty well. And for some reason, this cycle, there's other assets that also do well when interest rates go down. We'll say the overall stock market and stuff like that. Generally speaking, though, when you get a large increase in interest rates like this, then you get a larger selling pressure move off of that. That generally means that you've got weakness in the market, that there could be some sort of selling pressure fear moment, whatever it is. I don't know what that is. It could be something with the banking system. It could be liquidity. It could be, I don't know, something. But to me, this looks like we still have some further to go. And maybe we could back down here for a potential target point. That, I think, depending on what the yield curve does, could be good for precious metals. And then the 30-year also fallen down today, 2.66%. The 10-year was down 2.62. It's pretty big days, guys. And you can see the big selling pressure day that we had today. The question I have is, how sustaining is this move from here? Are we still going to go down, or are we going to gather ourselves and turn back up to move on higher? Inflation will be the driver of yields, or the lack thereof. If we don't have a lot of inflation, we'll see this come down. If we get a resurgence of inflation, I expect yields to go back up. The weird part is the long end of the curve's been flipping back and forth, flipping up, flipping down. It's getting quite volatile on the long end, and we'll see how volatile that stays. Again, I don't have a clear direction on if this is going to fall further, or if we're going to get some sort of support here. I think we're going to get support. We've got lots of buying and selling pressure in this zone here, so I think we're going to get support in that 4%-ish level area. So I think we'll be bouncing back and forth like that before maybe a move higher eventually, because I think inflation will come back. TYX TNX ratio holding steady today. It's not really helping precious metals too much from the yield curve perspective. The dollar's down and yields are down, but the yield curve did not really uninvert like we've seen, some of these big days there. TLT's up quite a bit. That looks pretty good to continue higher for TLT, which is bond prices. And that looks pretty good for a move on up, which makes me think that we could see yields on the long end still come back, which would be good for gold and other precious metals. And then the yield curve, I don't know how this is pulling it off, but we are still inverting on the yield curve today, which means that the short end of the curve was stable. So it moved down a little bit on the short end. And then this is the short end of the curve, if we were to just label it that. And then the long end of the curve, which is like your 10, 30 year, went down more. So the curve still stayed inverted, where the short end's higher than the longer end. It still stays inverted or inverted further based off the long end of the curve inverting further than the short end of the curve. So kind of a funky setup here. So gold didn't really get that uninversion boost behind it. And then we had oil go down too, and it's kind of like, the heck is going on here? So we've got gold. It's up $5, but it's not necessarily a pretty chart here. I'm not convinced that this is just going to rip it, but on the other hand, yields look like they want to fall. Generally, when yields fall, gold goes higher because you're going to get a larger difference between inflation and real yields if yields are falling. So you get a bigger real negative rate, which is good for gold. But the chart, this is just an ugly looking chart. It's got like a squeeze up here in the corner. It broke out to the downside, but yet it's still going higher. But this chart doesn't give me confidence that we're just going to rip it to the upside. Silver's looking really good. On the other hand. So we've got all this conflicting data in terms of what charts look like and kind of how I marry all the charts up together. But this is still squeezing up. This looks good for a potential break whenever we get it. Platinum down a little bit today. To me, it looks like we could still, work our way down here and chop around a little bit. It doesn't look bad to continue higher if it wants to push it. There's not much selling pressure there with some pretty big green candlesticks and that trait that I look for. And palladium's still bottoming out. This very well could do a little bit further downside maybe if it wants to scare everybody out of it. But I think this is in the bottoming process. It's going to take some time. XAU to gold ratio, a lot of people bought gold and silver mining companies today. They did great. They did fantastic. They killed it. And again, this chart doesn't look all that pretty. We're up against resistance here. And we still have a lot of work to get above this downtrend line. Now, I'll be the first to say, guys, if we break through this downtrend line, I'm going to be like ultra bullish gold and silver mining companies. But we haven't broken yet. Looking at the CRV index, we're down today with oil. So that we could see a little bit further downside. A lot of the times what we get is a break of the trend line, then we get a return move, and then we rip to the upside. Is this return move also going to be the return move in yields? And then whenever this bottoms and starts to turn around, is that going to be the, we'll call it the beginning of the turn of yields as well? I don't know that, but I think these are all correlated. So I think we could see a little bit of short-term weakness in oil slash the CRV index and probably yields. And then eventually we'll have to see how that all correlates a little bit further down the road. CRV to S&P, we're back down a little bit today, 2.2%, and we're just kind of chopping back and forth here in a channel. GDX up 3.9%, real strong day today. We're back against resistance. Surprising, is this a flag pattern still? I don't know. We still have all these big red candlesticks all through here. We just got our first green candlestick today, kind of saying, hey, look, guys, we could maybe potentially turn. But again, we need to see some follow through. GDXJ, same thing. Is this a continuation pattern to the downside? I don't know that yet. We'll have to see. And SILJ, nice big candlestick, up candlestick today. And we're still below all these big trend lines on all of them. Crude oil, we're down 2.5%, surprisingly. And is this just going to be a return move down here? Where maybe yields drift a little bit lower, and then we turn and yields start to drift back up. I don't know. That's what we're going to have to wait and see. But right now, we're still above this support level. We were crunching our head on this resistance line up here. That was the resistance line we wanted to break, and we did not break that. We got rejected there, and then we came back down. And we'll probably gather ourselves at this trend line at about 72.50 or so. TTF gas selling off a little bit, but we've broken the downtrend line here. It looks good to go higher eventually. We're probably just going to base out here for a little bit and then work our way on up. Nat gas in America still struggling here. Some more selling pressure today, down 2.8%. We're at $2.04. I mean, that is incredibly cheap, guys. And this is not sustainable at this price. It can stay down here for a while, but it's not sustainable. We'll start cutting back production in natural gas if we stay down here. It is below the cost curve of some of the higher cost producers. XOP, yeah, you know me, down 0.6%, outperforming crude oil, but it's hanging in there. It's hanging in there, a little bit of a down day. It was purchased back up throughout the day, towards the back end of the day, and we'll see how that works tomorrow in terms of momentum. OIH also just slowly leaking off a little bit, down 0.3%, even though crude was down 2.5%. I think I think we're good. We've got good support, so we'll see how this plays out here over the next few weeks. Sprout Physical Uranium Trust just ripping today, up 6.17%. Nice bounce. So what we did is we broke out. We did a retest. And now we're going to be playing with these highs here. And we could get a big break and a big run in Sprout Physical Uranium Trust. Big run. URA also looking strong. We're at basically 52-week highs. There we are. And we have a closing up here, guys. Hopefully we can close here tomorrow, stay up here, and work our way on up. Momentum's to in favor of the long side. Uranium also ripping. This is a close, daily close. Let me see if this is an all-time high, boys. All-time high. So this is looking really good. We had a big squeeze, a breakup. We broke the all-time high with this big fat green candlestick there. We had small little pullback. Now we've got a big fat green candlestick engulfing the ones before it. I think we are going to go higher in URNM, URA, U.UN. Yeah, we do have a gap here. I get it. A lot of people say all gaps get filled. I don't know about that, but I do think that momentum's to the upside. We'll see how fast and if that momentum is carried through tomorrow. URNJ is the same situation, same setup. Nice. What we got here is we basically gapped up, sold off, came back, almost closed the gap. Now we are ripping again. TAN up 2.5%, likes those lower yields. It's holding on at the moment, just moving sideways. Not a pretty looking chart, I'll say that. Kind of looks kind of ugly. We've got COPX up 1.44%. Seems like this does very well with weaker dollar and weaker yields. That's what I've seen, the correlation in copper. So if we continue to get weaker yields, weaker dollar, I expect copper to go up. Lithium is up today. Again, momentum's to the downside in lithium. And our retest level is down here at $36. REMX flat today, and momentum's definitely to the downside. REMX and lithium just get no sort of relief, and they're just continuing to pull back. We've got S&P 500. We are up 1.25%. Pretty strong day today. And momentum still to the upside. This down day yesterday, there's no follow through. We shot right back on up. Same with the NASDAQ, shot right back on up. And we'll see how sustaining this is. I'm not really, I don't have any money in these sectors, so I'm just watching it. Surprisingly, KRE was down 3.1%. Is there a problem in the banking system? Is there a problem in the banking system? And is that what is causing yields to fall rapidly? Are they doing QE just kind of behind the scenes to save the banking system? I don't know. I feel like some things are kind of weird here when looking at all these charts. Like yields out of the blue just rocketed lower the past few trading sessions. And I'm also seeing KRE also come back down. Like, is there a problem here? What's going on? I don't know, but we can watch the news and see if anything comes out. I think there's a couple of banks that had some pretty strong selling pressure behind them. Emerging markets likes the weaker dollar, weaker yields, up 0.96% today. Not too bad. To make a move higher if yields and dollar continue lower. XHB also liking the long end of the curve, pulling on back. That 30-year down 2.6%. That's going to help mortgage rates and home builders. Moo also liking the move in rates. For some reason, whenever rates go down, this likes to go up. So that's what I've kind of noticed. If rates continue lower, we could see this start to put in a bottom and turn on up. And we'll see how sustaining the move in rates is. Copper down. We had a nice little trying to break out here yesterday, and we got rejected. We're still inside this pattern. We've got something big coming, guys. We've got a lot of patterns that are basically squeezing up, like silver. We've got copper here. A lot of base metals are still kind of basing out and squeezing up. We've got iron ore here. We're getting a little bit more selling pressure in iron ore. So it looks like we could see further pullback. It's convincing me. I'm still bullish on it, but in the short term, yeah, we're going to see a pullback here until we get some stronger buying pressure. Aluminum down 1.5. We're up against that resistance line, the top resistance line yesterday. We've pulled on back. We are just basing out back and forth, coiling up in aluminum. We've got the Baltic Dry Index also moving sideways, right on support. We've got Newcastle Coal down 1%. We are back to this support level down here almost. I probably raised it a little bit, but yeah, it's a little bit lower. It's like probably down here. Hitting that. Yep. So we are still basing out there. Give it time. It's going to take some time to turn around this big move from the top side. Generally, you get a momentum move, sideways move. It just takes some time. Bitcoin still working its way higher. Actually doesn't look too bad. We are encountering buying and selling pressure. Selling pressure here. A little bit of buying pressure on that side. You can see the green army versus the red army. They are dueling it out back and forth. Is this a continuation pattern to the downside? We'll see. We'll see. Ethereum also getting a little bit of buying pressure today, but is this a flag pattern? That's yet to be determined, and we'll have to see a clear break to the downside for me to be convinced that it is. And it could convince me, tomorrow if it does that. But yeah, that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Again, we've got a 7 a.m. question and answer session coming up on Saturday. You can ask me whatever you'd like. Right now in the markets, we're seeing things move on the long end of the curve just getting whipsawed all over the place. The short end has been relatively stable. So we're seeing the yield curve invert, uninvert, invert, uninvert, and go all over the place, bouncing all around. And that does have an impact. That volatility has an impact on how assets are being priced. So if you don't have a clear direction in yields, um, you don't really have a clear direction on where you think asset prices are going to go next. That's what I'll say. And if we are in a recession, we would see the 2-year yield drop. So we would see the whole curve drop. The 2-year would drop faster than the long end of the curve. What we're seeing is the short end of the curve stay relatively stable where it's at today, and the long end just go up and down all over the place. So I'm getting a real tough read on the overall markets of the direction of yields and where exactly we're going. We're coming out of a period where we have all this stimulus money and we're in the middle of an expansion phase of real estate. So it's kind of funky. We have slowed down in terms of bank lending and stuff like that, but they continue to pump the system with fiscal spending. So it's a tough read. I'm just going to say that. It's a very tough read. I don't think the read today is like anything that we've seen in history. There might be some periods with fiscal spending, but they threw stimulus money in this mix too. It's a funky read. But that's what I'll say for right now. We'll continue to monitor it. We'll continue to see what the yield curve does, continue to see what yields do, and continue to follow all these different sectors. So that's what I've got, guys. We'll catch you later. This is Finding Value.